Let's talk about how to get rid of PMI. And I'm not talking about on a new loan. I'm talking about you already have a mortgage and you've got private mortgage insurance. How do you get rid of that? Before I dive into this, do me a huge favor, hit that like button. And if you're not already a subscriber to the channel, make sure to hit that subscribe button so you get more content like this. All right, so you bought a house, you didn't put 20% down at the time, and now you've got mortgage insurance. So how do you get rid of it? So here's a few different ways. Now, you can, in a conventional mortgage, you can ride it out, you can keep making your principal and interest payment, and eventually, when your balance reaches 80% of whatever your original purchase price was, 80% loan to value essentially, your PMI will come off. Now, you contact your lender, you can challenge that if you don't agree with the timing on all of those things. Now, let's say though that that is you and you've been in your transaction for at least 2 years. So you bought your house, you got your mortgage, you did your less than 20% down, so you had PMI. Now 2 years has passed. And let's say that home prices have shot up a whole bunch. Maybe you've done some home improvements or you've made some extra payments towards your balance, and you know that you already have 80% loan to value or less, and that you should get rid of your mortgage insurance. Well, at that time, just contact your servicer and basically apply to have your PMI removed. In this circumstance, you're probably gonna have to pay for some sort of home valuation, whether it's an automated value or an actual appraisal, something that's going to show what the actual value of the property is to confirm that your balance is 80% or less than what it's worth. That being the case, you'll get rid of your mortgage insurance. Speaking of paying extra towards your balance, I did a video recently talking about a recast. A recast is where you make large principal payments, where you apply with the lender to have your amortization schedule recasted based off of your existing principal balance. You paid that balance down to where now you're at 80% or less. During a recast, you can get rid of that PMI. Now, let's say you did an FHA loan. Unfortunately, you've got mortgage insurance for the life of the loan. So there's no way to get rid of the mortgage insurance without refinancing into a non-FHA loan. That's typically what people do. Now, obviously, the interest rate that you're going to get on the refinance will play a role in whether or not it makes sense to do that, but that'll be what you'll want to keep an eye on if you've got an FHA loan and you're looking to get rid of that PMI. If you got questions about PMI, put them in the comments below. Maybe I'll make a video about it. See you on the next one.